Subscribe to LearnCab and hit the bell icon to get notified.
Welcome back, my dear learner. We've been talking about the general provisions in the previous sessions. Now it's the time that we go in detail about the policies that they have for export promotions. There are multiple schemes that are announced in foreign trade policy which talks about export promotion. Like we have learned in the objective of Foreign Trade Policy 2015-20, promoting export and facilitating easy trade was one of the pillars which drives this foreign trade policy. So for that, we will have to first have an overall idea on what are the export promotional schemes that are available in this particular foreign trade policy of 2015-20. So there are multiple export promotional schemes and each one of it is different in its own result, its own style and its own intention to influence the export from India. So the first set of schemes that we have is called as duty exemption schemes. Exemption is different from remissions, wherein there are certain schemes which gives exemption on customs duty on import of inputs which are used in turn for export of certain goods, and these schemes are Advanced Authorization Scheme and Duty Free Import Authorization Scheme, which we call as DFIA. These two schemes gives exemption on import of inputs which are used in manufacture of export goods. So there are multiple conditions that are put in for an importer who's importing inputs for the purpose of export to avail these particular schemes and allow him to have an advance authorization or post import authorization on import of goods which are inputs without paying any import duty. We will discuss in detail these schemes in the coming sessions. Next set of schemes are called as duty remission schemes. We've already learned about duty remission schemes like duty drawback scheme, wherein we have learned in customs there are sections 74 and 75 which we have learned, wherein 74 talks about import of goods which are exported back, wherein while you're exporting you will get up to 98% duty drawback. Then 75 talks about those import which are used in manufacture of certain exportable goods, wherein your drawback is linked to an all India rate, all industry rate, and there's a brand rate that is announced by the government. Based on that you get drawback of duty that you paid on import. You also have remission schemes under goods and service tax, wherein there are two methods in which export can be done, where you get complete credit on the purchases that you have made for export, and exports are either zero rated or you are paying IGST and getting entire refund of IGST. So all these are categorized as duty remission schemes. Again, I'm repeating, you have duty exemption schemes which are advance authorization scheme, which we will explain in detail. Then DFIA, duty free import authorization scheme. You have duty remission scheme, which is drawback scheme, which we have learned in customs, which I'm not going to detail in here, and duty remission schemes under GST, which you would have already learned in GST. Now these Customs Act and FTP both goes in hand together. Obviously, there is nowhere we can say that FTP will override the provisions in Customs Act. No act would prevail. But those policies that are given in FTP are in effect implemented through notification under the Act, which is mainly our Customs Act. Not only exemption schemes and remission scheme, you do have reward schemes. In case of exemption schemes, you don't pay any duty. In case of remission schemes, you pay duty and get a drawback on that, refund of that. In reward schemes, you actually get a percentage of your export as a reward or an incentive for you in terms of scripts. There is MEIS scheme, which is called as Mercantile Export from India schemes. You have Service Export from India scheme, which is called as SEIS scheme. Then you have status holder, given for certain set of people who are meeting certain export targets, was being given some privilege while they are doing an export. So these are all incentive based schemes which we are categorizing as reward schemes. Again, you have two reward schemes and a status. One is for the goods that are being exported, which is called as Merchandise Export from India schemes, MEIS, where you get a percentage of your exports as a reward. Like I told you, like a voucher that the government, I have told you in the earlier session, the government is giving you a coupon or a voucher as an incentive for you to use for paying some other duty. And these are all transferable when it comes to MEIS and service export from India schemes. These are all transferable, so it's as good as cash. Now, status holder is a set of people who are given privileged exports because they are actually adding a lot of, they're contributing a lot to our economy's exports. Then you have export promotion of capital goods schemes, wherein if you want to manufacture certain goods and then export, for that purposes you are importing capital goods, you have duty remission that is available, which is called as EPCG scheme. Then you have certain categories which can take registrations like export oriented unit, electronic hardware technology park, software technology park, biotechnology park schemes, or there are certain deemed export that you would learn in FTP. There are deemed exports in section 147 of GST Act, but this is altogether different, which talks about what are the deemed export in FTP. Both are separate. Then you have special economic zone schemes, which I discussed that it is a separate act and all those provisions are discussed separately there, but all these are having multiple benefits that is given to these people because they are all contributing towards export of our country, which would actually in turn promote export and get us the benefit of foreign exchange, get us the benefit of balance of trade being better in our side, being positive in our side. All that will come as an incentive for the government for promoting export. So broadly, the FTP's policies for exports are classified in these categories, 5 of them. I'm repeating again. You have exemption schemes. What are the exemption schemes? One is advanced authorization, another one is duty free import authorization scheme, DFIA, AA and DFIA. Then you have remission, which is going back to customs and GST. You have a drawback, duty drawback schemes in customs. You do have GST. In GST, you do have zero rated export schemes available. Zero rated exports are zero rated in GST, and you get refund of the inputs that you have purchased in a ratio and all that you would have studied. Then these two are exemption and rewards. Then you have exemption and remission. Then you have rewards, which means whatever export you do, government is giving you some kind of an reward for making this much of export. So that is called as merchandise export from India schemes, service export from India schemes, and there is a set of people called as status holders which are privileged to do certain exports. Then for capital goods, you have schemes called as export promotion of capital goods schemes. Then you have multiple entities which are oriented towards export, EOU, you have EHTP, STP, BTP and deemed export provisions, SEZ units. All these contribute towards multiple export promotional schemes that we have in FTP. So now we will have to dig deep and each one of it we will have to discuss. So to start with, we will start discussing duty exemption schemes. What are the duty exemption schemes that are available? So under duty exemption schemes, exporters, what is the benefit that the exporter has? Like I told you, there are two duty exemption schemes. One is Advanced Authorization Scheme, another one is Duty-Free Import Authorization Scheme. In both of these schemes, you can see that exporters can import inputs duty-free, which means, what do you mean by inputs? Those raw material which are used for manufacture. What are you going to do with this manufactured product? You're going to export it. So if you club these two, you can say that exporter can import the inputs duty free for what purpose? Export production. So you're producing something for export. For that production, you're importing inputs. That inputs can be given duty free. There are two duty free exemption schemes which are very closely aligned but different in some specific areas. One is an advance authorization scheme. Like the word suggests, you get an authorization to do duty-free import in advance, which means you're not doing an export. Before that, you're getting an advance authorization to do an import without paying any import duty, provided you accept and follow certain conditions. They will ask you to make certain export obligations. If you're making those export obligations, then no problem, your imports are duty free and that remains. So advance authorization scheme is one scheme that we will have to learn in detail. Second one, duty free import authorization scheme, which is also very close to this, but this scheme will be available for you after you make an export. So these kind of authorization comes after you perform as an exporter. So both of these schemes allow you to make a certain amount of import without paying any import duty or customs duty. Now it's the time that we dig detailed into advanced authorization scheme, understand various aspects of it. There are multiple examination questions they are asking on advanced authorization scheme. So it is very important that we get an overall understanding, and all the procedural aspects are available in Handbook of Procedures in FTP. Now let's look at advanced authorization scheme, each of the basic aspect. What is the benefit? First of all, what is the benefit of this particular advanced authorization scheme? Under advanced authorization scheme, inputs which are used in export production can be imported without payment of customs duty. So on your import of certain raw materials and inputs for your export product, there is no customs duty payable. You get an authorization, you get a license to make an import without paying duty. What about, see, we have already discussed in customs that when you import, generally you have basic customs duty, you do have some additional duties, also have IGST, and some cases where cess is levied, you have cess also. I'm referring back to Customs Tariff Act that we had studied. It talks about all these additional levies that we have in section 3 of Customs Tariff Act. So the question to you is this: whether you get exemption on all the duties including this GST. The answer is yes. GST and GST compensation cess have been exempted up to 31st of March 2020 via notification 57/2015-20 FTP dated 20th of March 2019. So there has been an exemption earlier that was applicable till 2018. They have extended till 2019. Now in March they had come up with a notification which extended that exemption of GST and cess on those advance authorization import till 31st of March 2020. Also, so this is exempted, customs duty is exempted, and let us talk about additional duties. Goods imported are exempt from basic customs duty, additional customs duty, education cess, anti-dumping duty, safeguard duty, unless otherwise specified. In certain cases, they have specified that the duties like anti-dumping, safeguard, all those can be levied. But generally, unless otherwise specified, all these duties are exempted on import of inputs under advanced authorization. Conditions for duty-free imports against physical exports are provided in notification issued under customs law. So there has been a notification on conditions of this duty-free imports. So when you refer back to the FTP, it says advance authorization has certain conditions to be satisfied. Advance authorization shall be valid for 12 months. Again, what is the entire understanding of advance authorization? Before I meet my export, I am asking to the DGFT or their regional authority to give me an advance authorization to import the inputs without paying any duty. Suppose they have given you that particular advance authorization. Now, can I do that import anytime after getting advance authorization? Will it be valid for 10 years, 20 years? No. Should be some time limit. There must be stringent provisions so that nobody misuse and make additional profit out of this particular scheme. Advance authorization will be valid for 12 months starting from the date of issue of such authorization, which means I'll have to do the import within 12 months. Now, there are cases where I'll do a deemed export. So, advance authorization for deemed export shall be coterminous with contracted duration of project execution or 12 months from the date of issue of authorization, whichever is more. So, you are eligible for advance authorization even if you are actually doing a deemed export instead of normal export. In such cases, if it's a project that you are helping on, then it will be duration of that particular project if it is more than 12 months. If it's less than 12 months, then 12 months time is what you will get for making an import of inputs without paying any duty. Now, why am I importing this input? For the purpose of export. So, when should I meet this particular export? Period of fulfillment of export obligation under advance authorization is 18 months from the date of issue of authorization or as notified by DGFT. So, I get an authorization, I have to import within 12 months. Also, from the date of your authorization or the notified date, within 18 months, I'll have to meet the export obligation. So, government has to ensure that these are effectively contributing to my export revenue. Now, exports proceeds shall be realized in freely convertible currency unless otherwise specified. So, you'll have to get it in foreign currency. Now, let's look at what are the basis of issuance of advance authorization. So, you have multiple methods in which you can actually get an advance authorization. Certain products are already mentioned in standard input output norms. So, as per that norms, I can get an advance authorization for inputs, or you can even say, for example, if it is not available in SION, or there has been an ad hoc norms, or there has been a delay in getting the norms, or in such cases, you can actually make a self declaration to the regional authority of DGFT and then get an advance authorization. So, it can be even on the basis of self declaration, or if applicant specific prior fixation of norms by the norms committee. So, there could be applicant specific norms that is fixed by norms committee. Based on that, can also an authorization be given. There could be even self ratification schemes under which if norms are not available, I can go ahead and then take an advance authorization. So, there could be 4 methods in which I can take it. One is there is a standard input output norms about my inputs, about my notified product. I can take an advance authorization for such product, or I want more or something other than that, other than what is mentioned in the norms. See, standard input output norms are going to mention about what are the type of inputs that will be required for a certain output. So, if I want something more than that, then I have an option, go for it self declaration, or I don't have a norms for my set of product, then I can apply and then get it, or I can ask for there is an applicant based norms If that is there, then go ahead with that. Or I can go for a self-ratification scheme wherein I declare and then get it ratified later. Next, items which can be imported duty-free against advance authorization. The question is, what are the items I can import without payment of duty? Can I import everything? No. I'll have to import inputs which are physically incorporated in my export product. So, considering a normal wastage which is also there in the norms, those inputs which I can identify from the exports, that is allowed as duty-free imports. Then fuel, oil, catalysts like the chemicals which are consumed or utilized to obtain export product, that can also be imported without duty. Mandatory spares which are required to be exported or supplied with resultant product, but it is permitted only up to 10% of CIF value of authorization. So I cannot have 90% of my import being spares. It can be only 10% of CIF value of my authorized imports. Now there could be specified spices which can be allowed when it is used for activities which are more likely kind of a manufacturing activity, not just for the purpose of packing, grading, cleaning and all that. So specific spices only when it is used for activities like crushing, grinding, sterilizing, manufacture of oils, and not for simply cleaning, grading, etc. So only when you are actually doing those spices, you are actually doing an activity over that spices other than just cleaning it and then exporting, then you can actually do an duty-free import. This is the 4 type of inputs that are allowed to be imported without paying any duty. There are certain items reserved for state trade enterprises. We had discussed about what is a state trade enterprises. We have said that there are certain exports and imports which are free but can be done only by STs. So items reserved for STs cannot be imported against advance authorization. So that cannot be imported with an advance authorization because it's already reserved for STs. So these smaller things can be picked as examination questions. Now actual user condition is available for advance authorization. What is actual user condition? Advance authorization and or materials imported thereunder will be with actual user condition, which means it is not transferable. The one who is actually importing has to be the one who is using it and then exporting that particular exports. Because actual user condition is there, those product which has actual user condition specified can be coming under advance authorization. So the one who got this authorization, say for example, I am the importer, exporter, I import inputs and I export certain manufactured product. The point here is that if I import certain inputs, I wanted to go for advance authorization and I got advance authorization. So which means I am importing those inputs without payment of any duty. Now the question is this, say there is another person who wanted to import the same set of goods. Can I transfer my authorization and ask him to import without payment of any duty? The answer is no. So there is no transferability that is available for this particular advance authorization because actual user condition is present in advance authorization. So it is not transferable even after completion of export obligation. I have a set of export obligation to complete. Even after I do that, I cannot transfer my advance authorization and ask someone else to import without payment of duty on behalf of my authorization. What you can do is that authorization holder will have an option to dispose of the product manufactured out of duty-free inputs in DTA, domestic tariff area, once export obligation is completed. What you can do is that you can sell it to another person in India itself once you meet your export obligation, but you cannot transfer your advance authorization. Waste and scrap arising out of manufacturing process as allowed can be disposed on payment of applicable duty even before you fulfill your export condition. So there could be waste, you cannot say that that also needs to be exported, but when you are removing that to DTA, the normal duty needs to be paid. Next, who are eligible for advance authorization? Advance authorization can be issued either to a manufacturer exporter, which means the one who is manufacturing and exporting, or a merchant exporter tied to supporting manufacturer. So it can be given to a manufacturer exporter or a merchant exporter, but there should be a manufacturer attached to him. So such authorization can also be issued for physical exports, even for intermediate supply when you are having a merchant exporter, and supplies made to specified categories of deemed export. So similar to your intermediate supply, I'm a merchant exporter, I'm importing certain inputs, I'm asking someone to manufacture and then give it to me for export, or I'm supplying this input to an exporter. So those kind of things are given in deemed export. That those people who are actually doing a deemed export can also take advance authorization. Then supply of, somebody is supplying stores on board of a foreign going vessel, provided there is specific SAON in respect of items supplied. So even as a store, if you're supplying something, if it is mentioned in SAON, then you can go for an advance authorization of respective inputs. Can I source the inputs domestically? Holder of advance authorization has an obligation to procure materials or inputs from indigenous manufacturer or STEs in lieu of direct import against advance release order, invalidation letter, back-to-back inland letter of credit. So you do have a mechanism where an advance authorization person, somebody who's got an advance authorization holder, he wants to take certain goods as inputs within India, he can also do it. Through an ST also he can do, and he can, instead of advance authorization, you can do it against advance release order or invalidation letter or back-to-back inland letter of credit, wherein you get the same option of duty freeness. Advance authorization holder may obtain supplies from EOU, EHTP, BTP, STP, SEZ without obtaining any advance release orders or invalidation letter. So if at all you want to take an inward supply or input purchases within India, if you are getting from a normal person or an ST, you will have to take a document like advance release order or invalidation letter, back-to-back letter of credit and all that. So these are the documents that will support that purchase. But this is not required from EOU, EHTP and all that, because they are as good as a person who's going to export. So you can actually get it from them and use it as your import. It will be as good as your import. You don't require any AROs. Now what are the conditions for redeeming authorization? Very important. Let's look at how do I redeem this authorization. If at all I want to redeem the authorization, it is very necessary to establish that inputs actually used in manufacture of export product should only be imported under the authorization, and inputs actually imported must be used in export product for redeeming authorization. So those product that is going to be used in export product, that only should be imported and it should be actually used in that export product. So the second condition for redeeming authorization is that, so first one is that you have to establish that the inputs are for export product, you will have to actually use it. Then name, description of the inputs in the authorization must match exactly with the name and description endorsed in the shipping bill. So they're even going to another level and saying that whatever inputs you have taken, those descriptions should match with whatever shipping bill that you have for your export products. Then quantity of inputs to be allowed under advance authorization shall be in proportion to the quantity of inputs actually used or consumed in production. If the goods are imported against advance authorization but export obligation is not fulfilled, then you will have to pay the duty. So your advance authorization will be based on how much inputs are required for production of export product. Also, if you don't meet the export obligation, then on your advance authorization product also, whatever import you have done, you will have to pay the duties. Then this provisions will also be applicable for supplies that is made to SEZ or deemed exports. You can even take advance authorization for supply to SEZ and deemed exports. Those provisions of meeting the inputs and output similarity and checking of those things and meeting export obligation, all that has to be satisfied even in case of deemed export and supply to SEZ. Now, there is a very important provision. This has been asked in examination. I've been telling you that for a particular person, he can apply for an advance authorization because he is going to import certain inputs, use it in manufacture of certain product, certain goods which are going to be exported. Now the question is this: if I'm an exporter who is doing it for a quite long time, can I get an annual authorization for a particular limit? There is an annual advance authorization that is available. So provided there is an annual requirement that is being met, exporters who are having past export performance in at least preceding 2 financial years. So if there is an export performance as specified available for the last preceding 2 financial year, they will be entitled for an annual advance authorization. And that entitlement of annual advance authorization is CIF value of imports is already mentioned. So if I am coming under this category, I have past export performance to prove, then I can get following advance authorization of the CIF value which is mentioned. One is 300% of the FOB value of physical export and or free on road FOR value of deemed export, because deemed export I am not doing an export really, so I don't have an FOB value, rather I'll have a value to the place of dispatch of my particular goods to the person who's going to export. Now you think of it, I'm giving it to an EOU, they are going to export. So what is the value that I'm giving to EOU? What is the value up to the place of my destination, to the location of EOU? Whatever I can, that much if I load to the goods, then I call it as free on road value, FOR value. Then if I'm actually doing an export, what will be the value that will be available when I'm taking the goods on board, free on board value? 300% of that is the duty free import I can do. Or if that value is less than 1 crore, then 1 crore. So either these two, whichever is higher, would be the value that I can actually do a duty free import if I am going for an annual advance authorization. Authorization for annual requirement shall be issued only when SIONs or valid ad hoc norms exist on the date of issue of authorization. There should be an SION norms that is available, and if it is not available on self-declaration basis, they can be even given an annual advance authorization based on your past performance. So instead of asking for a specific thing, I can go for an year-based advance authorization for a certain amount of imports without paying any duty. Now, very important condition, it says you cannot actually do an import and export the same product. There is some minimum value addition that is required. Now, what is the minimum value addition that government says for you to have an duty free imports? Value addition except for gem and jewelry sector is calculated by the following formula: A minus B into 100 divided by B. See, don't think about the formula, the logic is very simple. FOB value of export realized or FOR value of the supply received. So how much is the export? Say export as X. Then value addition means I'll have to reduce how much is my import from that. So let's call that as Y. Then divided by Y will give me what is the value addition I've made. Say I have made an export of 120 and for that particular goods I have imported for 100 divided by 100, which means 20% is my value addition. So that's the calculation here. A is your export value, B is your import value divided by your import value. So A is FOB value of export realized or FOR value of supply received when you are making an deemed export. B is CIF value of inputs covered by authorization plus any other imported material used on which drawback is claimed. It has the same mechanism of it. So they're saying whatever inputs you have taken, if you're getting a duty free, it's okay. That also you have to add. If at all you're paying duty, I'll give you a duty drawback. So these two things, if you add, and if at all you have to get the benefit of advance authorization, you should have made a 15% value addition on that particular goods. Otherwise, there is no point in giving you an advance authorization. CIF value of inputs covered by authorization plus any other imported material used for drawback, or you paid duty and you're claiming a drawback. So if some items are supplied free of cost by foreign buyer, its notional value will be added in CIF value of imports, FOB value of export for the purpose of calculating value addition. So if there is some free imports that is happening because foreign buyer is giving you that, then notional value will be added in import and FOB value of export. Both you will have to add that because you're calculating a percentage. Now export to SEZ developers, co-developers, irrespective of the currency of realization, would also be covered. So in case of SEZ developers and all that, even if it's not, see, there are certain cases RBI has come up and said that even if you are getting Indian rupee, like your deemed exports, it will be deemed to be in freely convertible currencies. So those cases are as good as your export. So that also needs to be, would be covered inside this FOB value of export realized. So if at all you want advance authorization, what is the minimum value addition that is required? So they said minimum value addition required to be achieved under advance authorization is 15%. So if I am importing for 100, I need to export for at least 115. So I have made a 15% value addition. Except for physical exports for which payments are not received in freely convertible currencies and some other specified product. So except for certain specified product, it's 15%. So commonly you take it as 15%. But for T they have specifically said it should be 50% value addition. Then only you can opt for advance authorization. Now let's look at an example and then try to understand this particular condition, and we will look at multiple questions as well. XYZ Limited has imported inputs without payment of duty under advance authorization. The CIF value of such inputs is 10 lakh rupees. So CIF value of inputs I get. So I need to make a value addition. The inputs are processed and final product is exported. Fine, you can get an advance authorization. The export made by XYZ Limited are subject to general rate of value addition prescribed under advance authorization scheme. No other inputs is being used by XYZ Limited in the processing. What would be the minimum FOB value of exports made by XYZ Limited as per the provisions of advance authorization? So how much is the value addition I have to make? 15%. So if it is 10 lakh rupees, which is the CIF value of imports, my FOB value of export should be how much? So I'll have to make a 15% value addition. The formula is value addition is A minus B, which is nothing but FOB value minus CIF value of inputs divided by CIF value. So if my FOB value is to be 15% higher, so it will be if the CIF value is 10 lakh, it should be 11 lakh 50,000. That should be the FOB value minimum that is required. Anything more than that, it is you are satisfying the value addition condition. Look at the second example. So the question is, Flintech manufactures goods by using imported inputs and supplies the same under aid program of United Nations. The payment of such supply is received in free foreign exchange. Can fintech manufacturers seek advance authorization for the supply made by it? The answer is yes. Even for supplies under aid programs of United Nations, it's coming under your deemed export, which we will discuss later, but I'm just taking that particular case here itself. So supply of goods to UN or international organization for their official use or supply to project financed by them are deemed exports. So if I'm supplying goods to UN or international organizations for official use, or see they might be situated in India itself, but if I'm giving it to UN or international organization or supporting to their project, it is considered to be a deemed export. So if I have made deemed export, then I'm eligible for advance authorization on my inputs. As simple as that. Next example, A has used some duty paid inputs in its export product. However, the rest of the inputs he wants to apply for advance authorization. Can he do so? Can he go for payment of duty in some, advance authorization for some other? Yes, there is drawback that I can claim, duty drawback I can claim for those duty paid, and those other product I can go for an advance authorization. So I can do so. In case of part duty free and part duty paid imports, both advance authorization and drawback will be available. Drawback can be obtained for any duty paid material, whether imported or indigenous or used in goods exported as per the drawback rate fixed by Department of Revenue, Ministry of Finance. Advance authorization can be used for importing duty free material. Drawback allowed must be mentioned in the application of advance authorization. I'll have to mention about drawback in that. In such case, all industry brand rates are not applicable. There is a special rate that will be given for in such cases where you are having both advance authorization and duty drawback. So manufacturer has to get specific brand rate fixed from commissioner for these kind of exported products. So I can have inputs, some gone for an advance authorization, some inputs that can be gone for an duty drawback. That is possible. Now let's look at the summary of advance authorization scheme. Very important. The day before the examination, you should be able to look at one slide and then you should be able to understand what are the things you should remember. So what is the meaning of this advance authorization scheme? In this particular scheme, inputs which are used in export product can be imported without payment of basic customs duty, anti-dumping duty, safeguard duty. Even IGST and cess are exempted till 31st of March 2020 as per the latest notification in March. Now what is the validity? It is valid for 12 months from the date of authorization. And when should I finish my export obligation? I have to finish it within 18 months from the date of authorization. In some cases I can go for an annual advance authorization. Now what are the items not eligible? If the items are reserved for STE, it cannot be imported against advance authorization. What are the items eligible? There are actual user conditions, thereby it is not transferable. Inputs which are physically incorporated in export product, mandatory space up to 10%. Specified spices if they are used for crushing, sterilizing and not simply for cleaning, grading, etc. Who can do this? A manufacturer exporter, merchant exporter, deemed exporter, supply made to UNO, SEZ, supply of stores on board wherein SION mentions about that store. Then what is this annual advance authorization? Again, if I am having past export performance at least last 2 years, then I can go for an annual advance authorization which will be higher of following: 300% of FOB value of export in the preceding financial year, or if it's deemed export, then FOR value, 300% of that I can do as my import and 300% of FOB value of export would be the CIF value of my imports maximum possible. So if that is that amount, 300% of FOB value of my export in the last year is less than 1 crore, then I can do an advance authorization up to 1 crore. And do I have to have value addition? Yes, minimum value addition required is 15%. In case of tea product, it is 50%. So these are the summary points that you will have to remember for advance authorization scheme. Now we will come back and then discuss about duty-free import authorization scheme. How is it different from advance authorization? We will even compare that. Thank you.
Subscribe to LearnCab and hit the bell icon to get notified.